Welcome back to the channel. I hope you're having a great day wherever you are around this beautiful planet of ours. And if you're in the US, happy Thanksgiving. Let me know in the comments section what you're having for your meals today. I am an absolute foodie. If you follow me on Instagram, food is basically my life apart from crypto and gym and surfing beach. Anyway, enough about me. What I'm finding interesting in the markets today is the three-wave pattern that we tend to experience every time we are in a bear market. I'm going to compare this on Bitcoin and the S&P going back decades upon decades, because we want to have more than just 2 or 3 data points, which is what we typically get in Bitcoin. All right, so I'm going to keep this as simple as possible. Essentially, this is building upon our series, our end of month and monthly forecast series as well. I thought I'd get into something that I find quite interesting, so hopefully you guys do too. Smash up the like, subscribe, bell notification icon, and if you are interested, camera's on an angle today. I'm using my iPhone because the update for the MacBook with Ventura just stops any other software working with products that are not Apple. So fortunately, you got to look at the side of my balding head. So let's dive straight into the analysis for today. And these are some of the topics that we are covering in our three-wave pattern for the old Hopium. I looked at yesterday's video. People are not really ready for any sort of Hopium right now. Yes, I do think markets will have some sort of resistance levels hit. We looked at the S&P and Bitcoin, and yes, they do tend to move up and down. My view has not changed overall, regardless of what people think titles mean. Got to watch the videos, of course, to understand the analysis. My view has remained the same, unchanged here, looking at a low forming in the S&P, which is the traditional macro markets. And of course, Bitcoin is also doing the same thing. The time, I think, is nearly out here. As we've had a peak in November, we've got a low now in November. Maybe we move to a new low for December, but I want to look at specific price targets here, percentage moves for next month, dollar moves, of course. Is it going to be a red month next month? That sort of thing here. And then just this three-wave pattern that we tend to see in every bear market, S&P, Bitcoin, whatever it may be. All right, so let's get straight into this. Here's Bitcoin. Let's do some of the simple stuff right now and just check out the month of December and November. The pink verticals here are November. The green are December. And of course, we don't have December just yet. We just want to work out, we're going to see a red month, green month, what's the percentage move down, those sort of things here. Of course, this is just analysis, a bit of a look to what's happened in the past to see if we can get a bit of an idea for the future. So last year we had a November peak. That was the all-time high. December came down the following month. So basically all I want to do here is just look at November to December. Nice little red month down for November, red month into December. The year before that, we were just starting out in this bull market, whichever way you look at it. Maybe that was the first part of the hype. It was green November, green December. Year prior, red November, red December. Year prior to that, we had a red November, red December. Year prior to that, green to green. Year prior to that, 2016 now, green November into green December. So you're starting to see this pattern here. Year before that, 2015, green to green. Year before that, a little different here, 2014, was a green November. Market was in the overall bear market. And then it was a red December, so green to red. Year before that, massive green. It was about a 500% move here. And then it was a red December, so green to red. Year before that, green to green. You can see this down here in 2012. Year before that, in 2011, November marked the bottom of the correction. And then you had a green December. And year prior to that, the last one here in 2010 was a green to green. So overall, the majority of the time, whatever November has done, December has followed. And doesn't necessarily mean that it's followed to the same degree as what November did, but it was still the same color. So that's the first thing that I'm noticing here, that's basically the pattern. And in one case where it wasn't the pattern, you had a red November in 2011, you had a green December, which basically November marked the bottom of that 1, 2, 3, 4, 5 month down period. So that's a good sign here. That's some hopium that we can throw at the market. The only other period that seemed a little bit contentious was 2014 within the bear market. You had a green November, but then a red December, and then there was the final pain of January 2015. So I know a lot of people might point to this area. However, it doesn't seem like we're in that same sort of pattern. We haven't got that green month. Sure, there's still another 5 days to go. But if you think November is going to turn green, maybe we'll end up with this sort of pattern here. But overall, what we've seen is if November is in flow where it ends, December tends to follow as well. Now, here's a little surprise from what I was looking at for 2018. So you got a little bit of the data there already. We're just looking at the low of the month, so low of November into the low of December. So we will have to assume with 6 days to go that November is going to be a red month. So going according to history, we'll probably get a red month for December, just looking at this, but it doesn't necessarily mean it has to be so big or dramatic like maybe the previous months here in June, which was actually far more dramatic than what we saw in November. But of course, the pain in November felt almost identical to the June pain, right? But you can see how much money was actually lost in the markets. There was a hell of a lot more lost in May to June than there was in November. Maybe it's to come in December. We'll wait and see. But I'm definitely not of the opinion that that is going to happen just yet. None of the signs in the market are actually pointing towards that. So just let's have a look at this low. November to December low, there was about a 10% drop. So the low was 3,465 and we got a low at 3,100. So basically a 10% drop there. If we were to do something similar here, assuming, yes, I don't like to assume, but that's all we have right now. Assuming the low is at 15,473, 10% down brings us out at about 3,880, almost dead on that previous top that was in 2019, and also the monthly bodies of the candles back in 2017. So some big macro resistance or support levels here. If we just use the tops and draw our line out here, you can see that 10% would basically bring us out right at top of that. And then also that was the October top before the market broke out in November. That gave us that new all-time high of 2020. So a lot of good support areas could come in here for December if December follows suit of November and it doesn't actually go that much lower. Okay, so that's pretty much a price target there and a time target for, let's call it a worst case scenario or hopium for the market being over in terms of this bear market. A possible 10% move, which is similar to what happened in the last cycle there. And that basically lines up very well with other price, which were resistance, that might end up being price support levels. So the price again was about, call it 13,900. And sure, you could have 14,000 as a round number thrown in there as well. So let's go over to our checklist. If November is red, what will December be? There you go, bar color. We're looking at probably a red, but there is the odd possibility that we get something like 2011 where November was the red, marking the low of the month, and then December happened to give us that bounce away move into January. February held out again, and then the market was on its way again. In terms of a percentage move from that December low to the November low to the December top, gives us a 136% move. We're not expecting something like that from 15 grand all the way up to $32,000. But you can still see it was basically up for the last half of November, or some of the days there to get it back higher from the low, and then December to move on from that point. So I don't think we're going to get a 130% move if December was green, but you can see there was a possibility after such a long downtrend here, straight downtrend from 2011 June all the way down to November 2011. So basically percentage moves there. In terms of the dollar, 10%, the low currently is 15,400. So take 1,500 bucks off. That gets you down to the 14,000 even, 13,900. What's next on our list? Well, this tends to come up a lot. People say, well, this time is different because we're in a recessionary environment and Bitcoin hasn't experienced a recessionary environment. Therefore, things have to go on longer and cycles should extend, etc., etc. That's generally the theory here. But of course, we've had other data here on the channel looking at the US dollar, S&P, our macro cycle of the real estate cycle, which no one else uses in their analysis, and it continues to prove time and time again that the market works to this approximately 18.6 year cycle. So what I'm going to do with this one here is then look at it in terms of the S&P. So let's get over to the S&P as well. We can tick off these ones, November low to December low. It's what we found above. And then as I go through the S&P, looking at, is this time different? We're going to look at this 3-wave pattern to the market. While I'm on Bitcoin, let's just have a quick look at the 3-wave here. Basically, what we're going to look at is the bear market downtrends and a monthly swing level here. So you got the Gann swing indicator. Link to this is in the video description down below. So check that out if you want to have this on your chart to use as a good indicator for a bullish or bearish market on a macro scale. So what we're looking at is these particular areas here. Basically, what I want to get a feel for, and if you're in the market, you would have experienced pretty significant emotion to the downside and then hope. Motions, downside, hope, down and hope. Basically, that's what's been going on in the market. So you can see we got a move down and then a rally against the trend. A move down, a rally against the trend. You can basically call this maybe our third move down that was into the September low here, October up, and then November down. So maybe you got 3, basically 1, 2, 3 moves against the trend because the trend is down, it's bearish, and that tends to mark somewhere near the final lows now. Basically, time is nearly up. You could almost use this as 1 move against the trend, 2 moves because you see the green at first, and 3 final dump here, or 1, 2, 3. Now, some of you might be thinking this is a little similar to Elliott wave corrective patterns. I'm no master at Elliott wave. It's quite subjective. It does have a lot of merit. And if you have a weekend that you want to commit to this and go through some of the analysis that you can find online with some good programs, definitely, by all means, learn and put this to good use for yourself. But as I said, I'm no master at Elliott wave, and I don't want to get into something that is far too subjective. I think some of the stuff I do in terms of my cycle analysis might be subjective for a lot of people. Let's leave it at that and just look at some of these wave patterns that we see happen time and time again over the course of the market, which also line up with our timing cycles as well. So we got the 1, the 2, the 3, and then the reversal basically took out all the previous tops. If you guys are following and you've heard me talk about monthly swing tops, smash a like down below as well and let me know. Once those monthly tops are broken, you can basically say that your bear market is over and you're either into an accumulation area or you're basically going straight into the next bull market. So here are the monthly swing tops. You can see the market just took off, broke the monthly swing tops, and accumulation has occurred. All right. So I believe once we are hitting this low, or once we basically break through the monthly tops, after hitting a low, of course, that then is a major confirmation, one of 3 that we look at for the bear market being over and either an accumulation period starting and also, the bull market starting. Many of you guys know I've been talking about this area between June and November as being part of the accumulation area. I do think that is still possible, especially when you can see back here. This was essentially distribution, but it ended up being accumulation once the market broke out of the bottom accumulation area here. Basically a massive reaccumulation before another reaccumulation, and the market took off. So there's a lot to say here that on one end, it was distribution before the final dump, and then once it pumped out of it, it was accumulation again before the market took off. So going back again to the next cycle, we've got one data point here. The next data point is the 2014 bear market. Dump, correction, or the rally here. Dump, rally, and then a higher low. Market went into the accumulation. Market broke out of the monthly swing tops later in that accumulation. Final dump, and then the market took off from that point. So we have a few moves against the trend, and that's what we are seeing right now. We've already had 1 major one here, 2 major ones here. Potentially this is the 3rd one. It looks quite small, so we'll find out obviously over the coming months. But we are definitely in the bottoming zone. Timing is just working out for that at this point in time. Let's take a look at the S&P for a few more examples of the wave and the correction within the bear markets. We can go back to 2007, down, up. So there's your 1 correction, 2 corrections, 3 corrections, a lower low, and then the market takes off and breaks the previous monthly swing top, puts in the higher low, and the market moves away from that point. I can guarantee you, if you weren't in the market in 2009 or paying attention to any sort of financial media at that point, all of this period, all of the next period in 2010, 2011, all of the next period through here in 2012 was still extremely bearish, very, very bearish. A lot of people believed that we were going into another massive dip. But basically from this point in mid 2009, the monthly swings had broken, put in a higher low, and was then moving in the upwards direction very, very quickly, taking out all of the previous bars that were set from the Lehman Brothers collapse. That was basically here, October 2008. And you can see by mid 2010, the market had overcome all of that negativity in the market, had a little bit of a test, a correction to the downside, and then kept going all the way up. The rest is history from that point. So if we are to get something like this now, which we've looked at on the channel for some macro stuff on the S&P, I would guarantee that this is going to be extremely bearish. Essentially, if we sit where we are for November, December on the S&P, and then we have that little dump into the first quarter of 2023, is going to be extremely bearish. But look out for where this low comes in and where the market starts to reverse. This move down is obviously much, much smaller than that move there, which is telling you that there is buying pressure coming into the market and less selling pressure coming in, even though the news is telling you that the world should end yet again. This is basically your confirmation to say, look, things are looking pretty rosy, even though the media is absolutely off their minds, out of their heads, telling you that the world has to crash and go find a bunker and set up for the long haul because we could be dire for 10, 20, 30 years, right? Let's get back to the next cycle after my ranting here and see if we can get a bit of a three-wave move here. As I said, not Elliott wave precisely, but we're just looking for a bit of a three-wave move. Of course, there are strict rules for Elliott wave, which would mean that some of these are not technically three-wave patterns, all right? We don't have time to go into that now, but essentially I'm just looking at how did the market perform here. We had a big move down. Here was a correction, a big move down, and a correction. Yes, there is a tiny one in here, but it's only by a few cents. So we're going the emotion to the downside, a rally up, an emotion to the downside, rally up, final emotion to the downside, a rally up, higher low, which we know is extremely bullish, and the market took off from that point. 1, 2, 3 moves here, and the market starts to move again. Monthly tops are broken, away we go. You can see all the monthly tops are pretty much intact all the way down. That goes back to 2002. 1987, basically just an absolute dump. Market took off from that point. Monthly lows were not broken until the previous all-time high was broken. Nice and bullish, market goes again. So this monthly swing indicator really helps for the macro play here for investors who are looking to take a less active approach in the market and just sort of position themselves for the big picture. Monthly swing indicator, absolutely great tool to be using if you just want to be able to understand the macro plays here and clear out the noise of the news. All right, the last one that I want to have a look at here is 1970s. So you got the 73 peak down to the 74 low. You could almost call this one little move up, another move up, and then a dump, and then this is a third move here. So basically looking at 3 times in the market where the emotions changed, basically looking at that rally within the downtrend here. There's your downtrend. The emotional time changed. Think of Bitcoin. I'm thinking of January, February, March into that little peak that we had earlier this year. And then we had that next dump down. Market held out again. And then that final dump into the low with a higher low, which would have been extremely fearful times in late 1974. Market takes off, breaks the monthly highs quite decisively with many, many green months up, and the market starts to move again into that 80s top, and the rest is history from that point. So that's a look at the 3-wave pattern that is essentially going against the trend. You had the bear market, and then we see that move against that trend. Let me know in the comments what your thoughts are on seeing that 3-wave move. Have you noticed that yourself, or is this something new to you guys? We're going to keep updating the channel with this series of the macro look at monthly charts on Bitcoin and the S&P. It's been very, very helpful to have the S&P there because of the decades of data that we have across the board there. And we can use that in Bitcoin as well, because at the end of the day, yes, humans make up the market. That's what happens. And it is most important to understand the cycle and the timing over anything else. That, of course, is my view and how I trade and invest in the markets. It's helped me for the last 16 plus years. I'll thank you once again, guys. Smash up the like, subscribe, all that monkey stuff down below. And of course, it's our Black Friday special. Link is in the top of the video description. I'll see you once again at the next video, and hopefully this thing works by then if Apple fixes their BS. Thanks once again, guys. See you at the next one. Till then, peace out.